Are you panic stricken every time you read or open up some kind of article about the real estate market or the economy in general? If you are, you're not alone. I'm Mike, by the way. This is Mondays with Mike. And I wanted to bring you a market update, but also just an update on how things are going generally that's based entirely on facts. And actually, toward the end, when I do give, kind of a thought on where I think things will go in the near term, I'm not even going to base it on my own opinion. I'm going to base it on the opinion of someone much smarter than myself. So let's start with the local market. We're talking about regional numbers. So we're talking about Queens, Nassau, Suffolk. That's what I'm focusing on for our region, Long Island in general, with Queens included in that. So we had home sales year over year. This is through the end of May. We don't have the June numbers yet. Number of homes that actually sold down 18.8% from last, we'll say, Memorial Day to this Memorial Day. All right. The month's supply, which if you're a frequent watcher of this show, I've explained this many times. This is if everything was frozen and you had to wait for all the existing homes that were for sale to sell off before any more could get listed. That's how many months it would take for the current stock of housing to sell off completely. So we went from last Memorial Day 21, 3.4 months it would have taken for all the housing stock to sell off. Now it's 2.9 months. So it may not seem like a big difference when you say, 3.4 to 2.9 doesn't seem like a big numerical difference. It's a 14.7% decline in the housing supply. This is all very bullish. This is very good for house prices. So year over year, last Memorial Day to this Memorial Day, the average sale price was up 10.9%, almost 11%, and the median sale price was up 8.6%. All right, so before you think to yourself, well, this is just more of the same, we know prices are high, and we know that there's very low inventory. We also know that mortgage rates went up and that we're having kind of a shift in the market. So where do we pin that shift? What do we pin that on? I was looking at some really interesting numbers today. The affordability index that the National Association of Realtors and their economists put together, I think paints the picture. So the affordability index basically measures the median household income for a region, and it compares it with the median home price, and whether or not the median income is enough to qualify for a mortgage to purchase the house that's listed at the median level. All right, so let's give an example. If the index is at 120, that means that median household income in that region is 120% of what's needed to qualify to purchase with a mortgage a median priced home in that region. Maybe I should have led with 100, right? The baseline. If the index is at 100, that means that the median household income is exactly enough. It's for 100% of what is needed to qualify for the median priced house. So let's look at where we were and where we are. Last year this time, or we'll just say Memorial Day, beginning of summer 21, the affordability index was at 98. So the median household income was 98% of the way toward what was needed to purchase a median priced home. Again, Memorial Day 21. Now we went from 98 on the index to 70. So right now the median household income is only 70% of what's needed to afford the median level house, taking into account the prevailing mortgage rates. So what does that tell us? I mean, what it really tells us is that higher interest rates are compounding the problem that we have with wages and income not rising as quickly as home prices. All right, so basically, homes have become unaffordable at where they are right now. So before I go way too long, because we're already at 5 minutes and I'm going on tangents, I wanted to talk about what Mark Fleming had to say in Market Watch today. Now, he's the chief economist for First American Financial Corporation. I almost said First American Title. They have a very big title company, but they're also a big data company. They're basically a real estate finance company is the best way to think about them. So this is somebody who really has got a lot of experience with real estate and mortgage markets over a few decades. Um, what he is thinking, and I tend to agree with this thought, is that house prices in our region are not going to plummet. Uh, Based on what's happened in the past when mortgage rates have risen, we see a shrinking number of homes that actually change hands. So we do expect that fewer homes will sell in this environment, but it doesn't necessarily mean that the prices are going to drop. I mean, why would that be? I think it comes down to if you need to sell or really want to sell, you will, and maybe you'll bring your price in line with what the market can afford. And if not, you'll probably wait. You'll sit it out on the sidelines. Um, he also had, I think, some pretty good notes on what to expect if you're a seller or you're a buyer in this market. So for sellers, it's a reminder that it's not normal to have your house sell in a few days. Uh, the norm prior to the big run up that we saw in the housing market, the norm was 3 months. 90 days, 60 to 90 days. So I think sellers need to adjust their expectation or really just reset them to where they normally are. And for buyers, it's not having the expectation that you're going to be able to just get a house at a discount now or that you'll have a lot of negotiating leverage. I do think that we're going to see like the appraisal waivers go by the wayside. I don't think we're going to see the bidding wars that we've been seeing. So just a return to normalcy. But I wouldn't expect at least an immediate reduction in prices. And one thing I can say, if you're a buyer out there and you're working with a seller who is working with you on price or getting the deal to go through, that's a motivated seller. And I don't mean that as like time to take advantage. I mean time to get a deal done. We need some motivation and we need some leeway on either side so it's a win-win again. All right, that's all for now. Summer's fully underway. Hope everybody's having a great one. I'm going to bring you as many of these updates as I can this summer. And we'd love to hear from you, really. If you're watching this on social media, please direct message us. If it's by email, you probably know how to reach us by phone, but you can email us as well. Everybody have a great day, great week. Take care.